Your bank has sophisticated security systems, trained fraud teams, and billion-dollar technology. Yet people are losing more money to financial scams than ever before. Why? Because the most dangerous scams aren't targeting your bank's security. They're targeting the gap between your bank's protection and your own financial decisions. Welcome back, Digital Sentinels. Today, I'm exposing the 5 most devastating financial scams right now. Sophisticated schemes that banks are fully aware of but rarely warn their customers about. According to the Federal Trade Commission, Americans lost over $10 billion to fraud last year, with financial scams accounting for the largest category of losses. What's truly alarming is that 73% of victims had active fraud protection services with their banks when they were scammed. If protecting your hard-earned money matters to you, hit subscribe and that notification bell. Our community of digital sentinels gets critical financial warnings that banks often share only after thousands have already been victimized. Why don't banks more aggressively warn customers about these threats? The answer involves a careful balancing act. Financial institutions know that creating fear around digital banking could drive customers back to traditional methods, increasing costs and reducing profitable digital engagement. Banks also face a difficult legal position. Warning about specific scams in detail could provide a roadmap for criminals, while creating potential liability if their warnings fail to prevent fraud. As financial security expert Michael Torres explains, banks need customers to feel confident using digital services while also protecting them from sophisticated threats. This often results in general warnings rather than specific intelligence about emerging scams. The first and most devastating financial scam right now is the synthetic identity takeover, a multi-stage attack that combines stolen data with artificial intelligence to slowly drain accounts while evading traditional fraud detection. Unlike conventional identity theft that triggers immediate alerts, synthetic takeovers operate through gradual infiltration. First, scammers acquire fragments of your data from various breaches. Your phone number from one breach, email from another, and perhaps the last 4 digits of your social security number from a third. Next, they use AI to create a convincing digital replica of your identity and communication patterns. Then comes the infiltration phase. They contact your financial institutions, impersonating you, making minor account changes that don't trigger fraud alerts. These might include updating contact preferences, changing notification thresholds, or adding authorized users. Finally, after establishing trust over weeks or months, they execute their attack, transferring funds, opening credit lines, or changing account recovery methods. What makes this devastating is its patience. By the time large transactions occur, the scammer has established a long history of legitimate-seeming interactions with your bank. Rebecca Shaw from Colorado lost $167,000 to this scam when attackers slowly infiltrated her investment account over 3 months, making minor changes before finally transferring her retirement savings. Despite having the highest security settings, the gradual nature meant no single action triggered fraud detection. Protection requires regularly auditing all contact information and authorized users on your accounts, even when you haven't requested changes, and enabling out-of-band verification for all modifications. The second major financial scam exploits the latest advancement in AI technology. Hyper-realistic voice cloning that can fool both humans and voice authentication systems. Using just a few minutes of your voice from social media posts, public speaking, or even voicemail greetings. Sophisticated AI can now create a digital replica of your voice that's nearly indistinguishable from the real thing. Scammers combine this technology with information harvested from data breaches to create convincing scenarios. Family emergency calls to elderly relatives requesting immediate financial help. Verification calls to your bank. Authorizing transfers the scammer has initiated. Voice authenticated payment approvals through financial services. Direct calls to you impersonating financial institution representatives. What makes this scam particularly effective is that it bypasses traditional security measures. Your bank's verification systems are designed to recognize your voice patterns, but the AI clones those exact patterns. In a recent case, investment advisor James Moreno in New York had his voice cloned from a podcast interview. Scammers used the clone to call his assistant, requesting an emergency wire transfer to a client that resulted in a $425,000 loss before the fraud was discovered. To protect yourself, establish verification code words with financial institutions and family members that would never be shared publicly, and require in-person or video verification for large transfers. The third major financial scam leverages what security experts call hybrid phishing infrastructure, an advanced approach that combines multiple attack vectors to create nearly perfect deception. Unlike traditional phishing that relies solely on fake emails or websites, hybrid attacks coordinate multiple channels simultaneously. First, they create perfect replicas of banking websites hosted on legitimate cloud services with real SSL certificates, making them virtually indistinguishable from genuine sites. Next, they develop sophisticated email campaigns that pass all security checks, including DKIM and SPF verification, often by compromising legitimate business email systems. The attack then adds SMS verification messages that arrive at precisely the right moment in the fraud sequence. Finally, some advanced operations include call center components with real humans who have been trained to impersonate bank representatives. What makes this scam nearly undetectable is the coordination across channels. When you receive the phishing email and call your bank to verify, you're actually calling the scammer's operation. When you check for SMS confirmation, the scammer system provides it. Sarah Chen, a cybersecurity analyst at the Digital Fraud Prevention Alliance, explains, "These multi-channel attacks create a closed-loop of verification. Each channel appears to confirm the legitimacy of the others, creating a perfect illusion of security. To protect yourself, never use contact information provided in the communication itself. Instead, manually navigate to your bank's official website or use their official mobile app to contact customer service." The fourth major financial scam targets a critical vulnerability in the modern financial system: third-party payment processors that connect your bank accounts to various services and apps. Most consumers don't realize that when they use services like PayPal, Venmo, Cash App, or Buy Now, Pay Later options, they're creating additional access points to their financial accounts, each with its own security practices and vulnerabilities. Scammers exploit this expanded attack surface through several sophisticated methods, creating fraudulent authorization requests that appear to come from legitimate services you already use, exploiting outdated or forgotten payment connections to initiate transactions, manipulating the complex authentication flows between multiple financial services, initiating small test transactions that don't trigger fraud alerts before attempting larger fraud. What makes this scam particularly dangerous is that many consumers have no idea how many services have some form of access to their accounts. Each authorized connection creates another potential entry point. Michael Torres, financial security expert at the Consumer Financial Protection Bureau, explains, "The average American has authorized 13 different services to access their financial accounts in some way. Many people forget about these connections after the initial setup, creating a sprawling attack surface for fraudsters. In a recent case, a victim in Texas lost $18,500 when scammers exploited a payment processor connection to a service she had used once 3 years earlier and forgotten about. The transaction appeared legitimate to her bank because it came through an authorized channel. To protect yourself, regularly audit and remove payment authorizations for services you no longer use, and consider using a separate checking account with limited funds for connecting to third-party services." The fifth and perhaps most financially devastating scam right now targets investors through sophisticated investment validation schemes designed to bypass traditional fraud detection. Unlike obvious investment scams promising unrealistic returns, these operations create elaborate ecosystems of seemingly independent validation sources that convince even sophisticated investors of their legitimacy. Here's how they operate. They begin with a legitimate-seeming investment opportunity in an emerging sector like green technology, biotech, or digital assets, offered through professional platforms. They create an entire ecosystem of fake validation, including fraudulent SEC filings that appear in official databases, sophisticated websites with accurate financial terminology, fake news articles planted on compromised but legitimate financial news platforms, coordinated social media activity from AI-generated satisfied investors, limited initial returns to early investors to build credibility. What makes these scams particularly effective is their methodical approach to overcoming specific due diligence steps that careful investors take. Each verification attempt by the potential victim leads to another convincing but fraudulent confirmation source. Robert Kiyama, a financial fraud investigator with the National White Collar Crime Center, explains, "These operations are run like military psyops campaigns. They anticipate every verification step an investor might take and ensure they have a convincing response in place." A recent case involved a green energy investment scheme in California that created an entire fake environmental certification body, complete with official-looking documentation and a functional website. Investors lost over $40 million before the fraud was discovered. To protect yourself, verify investments through multiple independent channels, particularly through in-person meetings with registered financial advisors who have fiduciary responsibilities. Now, let's build your financial protection system. First, implement these foundational protections. Create a separate account with limited funds for all third-party payment services. Enable out-of-band verification for all account changes. Verification through a different channel. Establish verbal passwords with your financial institutions that aren't stored digitally. Conduct quarterly audits of all account access and payment authorizations. Set up transaction notifications with the lowest possible threshold. Second, adopt these behavioral protections. Impose a personal 24-hour waiting period for any unexpected financial request. Verify financial communications through official apps or by calling numbers on your cards. Never authenticate yourself to someone who calls you. Call the official number instead. Treat all investment opportunities with automatic skepticism. Create a financial decision buddy, someone you consult before making significant moves. Remember, even careful people can be victimized. The key is creating multiple layers of verification that don't rely on a single security approach. Today's financial scams exploit the gap between bank security systems and your personal financial decisions. By understanding these 5 sophisticated threats, you can protect yourself where banks often can't, or won't. 1. Synthetic identity takeovers. 2. AI-powered voice cloning fraud. 3. Hybrid phishing infrastructure. 4. Payment processor manipulation. 5. Investment validation schemes. For our comprehensive investigation into financial fraud, including interviews with actual victims and investigators, check the link in the description. Join our community of digital sentinels by subscribing and enabling notifications. Comment "financially protected" if you've implemented these safeguards, and share your own experiences with financial scams below. Remember, in today's complex financial world, your most valuable protection is knowledge. This is Dark Data Files, decoding the digital underworld together.